Stop scrolling, because if you don't watch the next 60 seconds, you could lose thousands of dollars starting this month. July 2026 isn't just another month. It's the month three massive financial systems get rewired and almost nobody is talking about it. Number one, if you have student loans, the entire repayment system you've known is being torn apart. Old plans are disappearing, new caps are kicking in, and millions of borrowers are about to get a notice they're not prepared for. Number two, if you're on Social Security, your payment schedule and benefits just shifted in ways that could trigger a dangerous phantom wealth trap. Spend wrong this month, and you'll feel it for the rest of the year. Number three, and this one affects almost everyone even if you've never taken out a loan, new consumer protection rules are changing how banks and lenders can treat you, and most people have no idea. Their rights just got stronger. I'm breaking down exactly what's changing, who it impacts, and most importantly, the three moves you need to make right now before July ends and your options disappear. This isn't fear-mongering. This is what's actually in the new rules, straight from the official sources. So if you don't want to be blindsided by your bank, your loan servicer, or your benefits check this month, smash that like button right now, because it tells YouTube to show this to more people who need to hear it before it's too late. Let's get into it. Stop scrolling, because if you don't watch the next 60 seconds, you could lose thousands of dollars starting this month. July 2026 isn't just another month. It's the month three massive financial systems get rewired and almost nobody is talking about it. Number one, if you have student loans, the entire repayment system you've known is being torn apart. Number two, if you're on Social Security, your payment schedule and benefits just shifted in ways that could trigger a dangerous phantom wealth trap. Number three, new financial protections are kicking in that change how banks and lenders are allowed to treat you. I'm breaking down exactly what's changing, who it impacts, and the moves you need to make right now. So if you don't want to be blindsided this month, smash that like button because it tells YouTube to show this to more people who need to hear it. Let's get into it. Okay, so let's start with the big one because this is the change that's going to hit the most people the hardest, and that's the complete overhaul of the student loan system. This all comes from a piece of legislation called the One Big Beautiful Bill, which was signed into law back in the summer of 2025, but a lot of the actual changes were written to kick in exactly 1 year later, on July 1st, 2026. And honestly, that delay is part of why so many people are caught off guard right now because they heard about this bill a year ago, filed it away in their brain as future me's problem, and now future me is here, and future me is not ready. So here's what's actually happening. If you're a graduate or professional student, the loan program you've probably been relying on, called Grad Plus, is gone. Done. As of July 1st, new borrowers cannot take out Grad Plus loans anymore. That loan used to let you cover up to 100% of your total cost of attendance, which for a lot of people in medical school, law school, or other advanced programs was the only thing making the math work. Now, your only federal option is something called a direct unsubsidized loan, and there are brand new limits on how much you can actually borrow through that. So if you were planning to lean on Grad Plus to fill the gap, you need to go back to your financial aid office immediately and figure out what your new numbers actually look like, because the old plan you had in your head might not exist anymore. Now, if you're a parent helping a kid through college, there's a change for you too. Parent Plus loans are getting capped. New borrowers are now limited to $20,000 a year, with a lifetime cap of $65,000 total. If you've already been borrowing before this school year, there's something called legacy status that might protect you from these new limits for a few more years. But if you're just starting out as a Parent Plus borrower, you need to know that ceiling exists now because it didn't before. And then there's the repayment side, which honestly might be the most disruptive part of all of this. For years, borrowers had a buffet of options: standard repayment, extended repayment, graduated repayment, income-based repayment, and that newer one a lot of people jumped on called SAVE. Well, starting July 1st, anyone taking out a new loan only has two repayment choices. There's the tiered standard repayment plan, which is based on fixed monthly payments stretched over 10, 15, 20, or 25 years, depending on how much you owe. And there's the new repayment assistance plan, or RAP, which ties your payment to a percentage of your income somewhere between 1 and 10%, with a minimum payment of just $10 a month if you're making $10,000 a year or less. The interesting thing about RAP is that it's actually designed to protect you from your loan balance ballooning out of control from interest, which has been a huge complaint about income-driven plans in the past. But here's the catch. If you already have an existing loan and you're on one of the older plans, you can usually stay on it as long as you don't borrow anything new after July 1st. The second you take out a new loan, you get pulled into this new, more limited system. And if you're one of the millions of people on that SAVE plan I mentioned, listen closely because this affects you directly. SAVE is being phased out completely by the summer of 2028, and loan servicers are expected to start sending out notices right around now, telling SAVE borrowers they have 90 days to pick a new plan. 90 days. That's not a lot of time when we're talking about a decision that affects your monthly budget for years. So if you're on SAVE, do not wait for that letter to show up before you start thinking about this. Log into your account at studentaid.gov today, make sure your contact information is current, and start running the numbers on what RAP versus the tiered standard plan would actually look like for your specific income and your specific debt. There's also a quieter change buried in here that actually benefits a certain group, and that's around Pell Grants. Starting this July, students can now use Pell Grants for short-term, high-quality workforce training programs, the kind that prepare you for skilled trades or in-demand jobs, not just traditional 2 or 4 year degrees. So if you've been hesitant about going back to school because a full degree felt like too much, this opens the door to shorter, more targeted programs being partially funded the same way a traditional degree would be. That's actually a genuinely good development hidden inside a lot of restrictive changes. Now let's pivot to shift number 2, which is everything happening with Social Security this month, because if you or someone in your family is receiving benefits, this affects your actual bank account in a very immediate way. The first thing to understand is the payment calendar itself got a little scrambled this July. Independence Day, July 4th, falls on a Saturday this year, which means the federal government observes the holiday on Friday, July 3rd instead. That sounds like a small detail, but it actually shifted some payment dates. If you were scheduled to receive a payment on the 3rd of the month, that payment actually landed 1 business day early on Thursday, July 2nd. If you weren't expecting that and you've got automatic bills set up around your usual payment date, that 1-day shift can throw off your budgeting in ways you don't notice until something bounces. But here's the part that financial experts are really sounding the alarm about, and it's something called the phantom wealth trap. Because of how the calendar lines up this year, some Social Security and SSI recipients are receiving 2 payments close together, one at the very start of July and another at the very end of the month. And when that happens, it can feel like you suddenly have way more money than usual. It feels like a windfall. And the danger is that a lot of people respond to that feeling by spending more, eating out more, making bigger purchases, when in reality that money isn't extra, it's just your normal monthly income arriving on an unusual schedule. So if your July looks a little fatter than normal, please do not treat it like a bonus. Treat it like exactly what it is, which is your regular income, just compressed into a slightly different timeline. On top of that, the Social Security Board of Trustees just released their annual report, and it's got some people panicking because it shows the trust fund is still on track to deplete its reserves sometime around 2033. Now, before you spiral, I want to be really clear about what that actually means, because there is a lot of fear-based content out there exaggerating this. It does not mean Social Security disappears in 2033. It means that if Congress does absolutely nothing between now and then, benefits could be reduced to whatever level can be funded purely through ongoing payroll taxes, which historically has still been around 70 to 80% of scheduled benefits. And historically, Congress has always intervened before letting that kind of cut actually happen. So if you're currently retired and receiving benefits, your checks right now are fully secure. This is a long-term structural issue that needs a legislative fix, not something that's going to suddenly hit your account this year. What you should actually be paying attention to this month is your own household budget and your prescription coverage. There's a new program rolling out, sometimes called the Medicare GLP-1 Bridge Program, offering certain medications at a reduced cost around $50. If you're on Medicare and you're taking or considering GLP-1 medications, it's worth checking with an independent Medicare advisor to see how this interacts with your existing Part D coverage before the fall enrollment period sneaks up on you. Now let's talk about shift number 3, and this one is broader, but it might end up protecting your wallet more than anything else on this list. There's a wave of new consumer financial protection rules taking effect that change how banks, lenders, and financial product providers are allowed to interact with customers. The big theme here is accountability. Regulators have been pushing harder to make sure that if you're sold a financial product that doesn't actually fit your situation, whether that's a loan, a credit card, or some kind of investment product, you now have stronger pathways to get refunds and compensation if that product was missold to you. This matters because for years, consumers were largely on their own if a bank pushed them into something that wasn't right for them. Now, there's more teeth behind the idea that financial institutions actually have a responsibility to sell you products that match your needs, not just whatever earns them the biggest commissions. So what do you actually do with all of this information? First, if you have any student loans, new or existing, block out 30 minutes this week to log into your loan servicer account and your studentaid.gov account and figure out exactly which repayment plan you're on and which ones you're now eligible for. Don't wait for a letter. Second, if you or a family member receives Social Security or SSI, write down your actual payment dates for July so you're not caught off guard by the calendar shift, and resist the urge to treat any extra feeling payment as bonus spending money. And third, start paying attention to your statements and any new disclosures from your bank or lender, because these new consumer protections only work for you if you actually know your rights exist. Look, none of these three changes are going away, and pretending they don't apply to you isn't a strategy. The people who come out ahead through transitions like this are the ones who get informed early and adjust before the deadlines hit, not after. So if this video helped you understand what's actually happening with your money this month, hit that like button right now. Drop a comment telling me which of these three changes affects you the most, and subscribe so you don't miss the follow-up videos where I'm going to break down exactly how to calculate your new student loan payments and how to protect your Social Security income through the rest of this year. I'll see you in the next one.